What does 268 horsepower sound like? You're hearing it right now. The all-new Audi A5. With breathtaking acceleration that commands attention. Precision crafted to bring the thrill to every turn. This is powerful performance. The all-new Audi A5.
Reality radio for a really great future. We're talking real money.
And again, let's get that phone number out of the way, shall we? I like to give it right away. That way you know that we want you to call. And we do. Here's the number we want you to use to call us. It's 855-935-TALK, 855-935-8255. If you're listening to the podcast, that number only works on Saturday from noon to 2 Pacific time. There's that ghostly bug again.
I can see it right above your head. Left.
Gosh.
Don't swing that way.
It's
You're
so
gonna
annoying.
Throw something out your shoulder
fast.
maybe. Yeah.
I'm sorry. It flew right in my face, little monster. 855-935-TALK. It only works noon to 2 Pacific, 3 to 5 Eastern time on Saturdays. Call us
The
then.
bug? It takes the rest of the week
The
off?
bug has been here for 2 days. It will not leave my studio. It just sits here waiting for me to return.
It's Florida. There'll be a new bug, trust me.
To haunt me. And it's
Well, it is
so
that time of year.
small.
Insignificant other than to bother you.
And it gets, I have really good hearing. I have ridiculously good hearing for an old person. I mean, I can hear like mosquitoes, like the.
What's that? Wait.
Yeah, you don't. And it goes by my ear and I hear this like, and oh, geez, there it is again. It's probably going to bite
You sound
me.
okay. You're going to be okay.
Suck the blood
Somebody
right
told me
out
that
of me.
recently, and I took their word for it.
Did
I'm
you?
going to give
Okay.
you the same
So it all
advice. You're
worked
going to
out?
be okay. It all worked out.
All right. So give us a call, 855-935-TALK. Now, we're going to be a little critical of some of you right now. Okay? Hope you can take it. Many of our lovely, lovely listeners still persist in believing that their portfolio in retirement should consist of dividend-paying stocks or income-generating bonds to create the income in retirement. And there's a lot of emphasis on dividend payout funds these days, dividend income strategies.
Yeah.
These funds are everywhere. ETFs are everywhere. They're being sold like crazy. And while I guess at first glance, it looks like a good idea.
You feel like you're getting something for nothing.
Yeah.
It's a trick.
Yeah. I'm going to get a nice steady income from these stocks. And,
I'm not going to have
it's
to touch the
safe,
principal.
And it's safe, and I won't have to touch the principal. Therefore, I'll still have my money. I just won't lose anything. But Jason Zweig, our favorite writer at the Wall Street Journal, takes exception with that.
Well, he had an interview with a guy named Richard Thaler, who wrote the 1992 book, The Winner's Curse, which I haven't read in a long time. They're updating that book. Mm-hmm. He and a researcher named Alex Imus. So as part of that, Zweig interviewed Richard Thaler, who's well-known academic about all of this, been around for a long, long time. And yes, as one of the things he asked him about, the way they put this, the first time I've heard it stated this way. Zweig asked him, most investors like to buy investments with huge dividend yields. They don't seem to notice that they're losing money on the principal. What would you advise these people?
Oh, that's a good question.
It is a good question.
And
then
Richard
he
Thaler's
answered,
a very brilliant economist. Yeah. So
he answered in a way that I hadn't really thought about. He said it took a long time for universities and foundations to learn this lesson. They used to hold lots of bonds and high dividend stocks, spending the income and leaving the principal alone. Eventually, they realized it was better to set a spending rule. Spend, say, 4% of the moving average of the wealth and invest to maximize long-run returns. In other words,
total return.
Yeah, exactly. Everything
Which
goes
has
in.
been
And this
the
is
strategy that we have been promoting and promulgating on this show and others before it for decades now.
Yeah, I know. And it's not popular.
No, because it's
more complicated. Yeah, and it sounds like you're spending your money.
Yeah.
It is, and people think it's harder. And so Zweig then says, in other words, if you need regular income, you don't have to invest in risky high income fund. You should focus on total return, Simply withdraw what you need from a safer fund, whether it's income or principal. And Thaler says that's right. I love the comparison with universities and foundations, because people always think, well, that's where the smart money is, right? They've got really smart people.
That's run by academics who we trust.
Yeah, exactly. So that's a very important, and that's gets to the crux of the matter in retirement. And as you said, this is something we've talked about here. We've done at Retire-Meet. Again, it's not as sexy, and it doesn't feel as good as getting those high dividend payouts. He went on to talk about a few other things I think you'll find fascinating, Don. The lottery-like characteristics of investors today. He makes a very good point that the place that Robinhood really makes the money, says these options, talking about options, weekly options, have the biggest bid-ask spread. This is how Robinhood makes its money. Retail
options
traders
have huge spreads.
Yeah. He says retail traders have suffered upwards of $2 billion in losses over a 2-year period and $6.4 billion in trading costs. Maybe we need to refine that old saw to say there's no such thing as a free trading app.
Right. There isn't, by the way.
Exactly.
The fact that Schwab charges you no commission to trade, let's use them instead of Robinhood. They are making their money on bid-ask spreads. Now, they're not encouraging people to trade more often to increase their revenue from those spreads like Robinhood is. And that's what puts Robinhood in a totally different class. Schwab is in that vanguardy area, the upper echelon of relative honesty. Honesty.
Yeah. Well, they're in the profit-making business too. And Robinhood, as we've talked about again many times, done some things I really dislike. He also points out different things that need to be done for retirement. One of them is everyone needs a retirement savings plan of some kind, and they don't. And second, how to move money when you leave one plan and go to another. I think those are very good things to think about.
We should probably spend some time on those, but we have to take a break. So give us a call, 855-935-TALK.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan, one that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
As always, your calls are invited here at 855-935-TALK, 855-935-8255. And Tom's sharing with us some really valuable bits of wisdom from a well-respected PhD economist,
Richard Thaler. He's been around for a long time. I was just looking at the book, too, trying to remember how long ago I read that. It goes back to 1992. They're updating it now. It's going to be out here in a couple of weeks.
Well, it's about time. I mean, it is 2025.
That's like that
30
was some years.
Well, wait,
33 years ago.
Yeah. Well, because tomorrow's my my 34th wedding anniversary. So
whoa,
yeah.
What's on for that?
I can't say. It's a surprise. My wife might be listening.
She does actually.
She does actually listen to the Saturday shows. No, she does.
What is that like?
Well,
when you
it's
have
weird.
A supportive spouse
weird.
that way.
It's weird because I'm
How's that
afraid.
work?
I go downstairs and I go, and she goes, "You were talking about me again."
Ooh.
And I go, "Yeah, but it was all in good fun."
That helps.
I don't think I said anything bad. I just said you liked Bewitched.
Debbie. We should just take a day and do the Debbie show.
I did the Debbie show once.
No. I'm not with her. Just about her.
Oh, about her. Okay.
Yeah.
Because I was going to say, we did a show together on business radio.
It lasted about 15
Business
minutes.
Radio Network started
I
a new
remember.
lifestyle radio
I remember.
network.
Yeah, we were carrying it, I think.
Lifestyle. I think it was Lifestyle Talk Radio or something like
right.
that. And so one of the people one of the managers
You guys
said,
are hilarious together.
You guys
should
are
do
so
the show."
great together. You should
Yeah.
do a show together. And I'd been doing a show for a long time by that point.
Yeah.
She had never done one.
Yeah.
It wasn't.
I think that's a quick way to finish
it wasn't
a
pretty. It was.
The idea of bringing my wife in here, putting her on the show.
Did you hear about the first call? Did I tell you the first call?
No, it was the first call.
The first call was.
Oh no! This is gonna
if
be
you
bad.
guys, if you ever go past, I can't remember the exact words, but he said if you ever do another episode, if I ever hear another episode, I'll have to kill myself. So that was, honest to God, I think that was the lowest point in my talk radio career.
Moving on. Richard Thaler. We talked about a few of the things that all these options trades that people think they're getting free are not free. They're costly not only in terms of the result, but in terms of the cost of the, as you said, the bid ask on these options. But he gets to I think a couple of things that are worth considering at least for retirement, because he said two major changes needed. First, many American workers still don't have a retirement savings plan at their workplace, and people often find it very difficult to reliably invest unless the money is taken from their paycheck. I couldn't agree more.
That's so
Same
true.
thing with me too.
And that's what's so nice. We now are getting into the time of opt out 401k plans.
But it's the fact that a lot of the companies don't have a retirement plan he's talking about. So that some states now have them. You know, I'm not a big guy for government and everything, but in this case, probably makes sense for figure out so everybody has access to something like this where there's a payroll deduction, it goes into a fund, and that's it.
Oh, hey, I just actually looked up your spreads on, let's use a Tesla option.
Okay, right now?
Yeah, Tesla option. I don't know what the date is. I don't really care. It's $100 Tesla option. At least that is the bid. Okay, the bid is $101.65.
101.60, huh? Yeah.
The ask, this is the difference between what somebody is trying to sell it for and what somebody's willing to pay to buy it, $108. So that's a 7% spread.
Yeah, right. That's huge. And that's what he's talking about.
That's better than charging like a 5% commission. They're making more money.
Yeah. He also points out that the current system does not, this is his words, work well for workers who change jobs often. Employer contributions may not be vested. Workers' savings often get cashed out if the balance is modest. A national retirement plan depository. That might be a good idea. Move the money there. You get saved on.
We've been talking about that since Nixon.
I know.
I mean, really that long, where they talked about some sort of a hybrid social
where the money
security,
goes.
where a portion of your money goes into an investment account and a portion of your money goes into the annuity, the pension type account, where you'd have both a defined benefit and a defined contribution plan. Defined benefit is a pension. Defined contribution is like a 401k.
Not many of the former, but a lot of the latter, of course. So, yeah, that would. But I think it would make sense. And again, people would have less tendency to cash them out, less tendency to leave them behind. Because even if they're a small amount, that money I personally think you should move it into your current plan or into an IRA, because you should have one
because it gets too
pre-tax
confusing
plan.
to get all,
Way
confusing. If you're a young person, and like a lot of young people do, it seems like you're with an employer for a long time because you're young and time doesn't move that fast. But over, in your 20s, you may have had 3 or 4 or 5 different employers by the time you get to your almost lifelong job in your 30s or 40s or 50s or in my case 60s. No, 50s.
Close.
50s. What was I going to say? Oh, you get all these statements. You're getting all these statements and you will lose track.
Well, it's not just losing track, it's building the right portfolio.
Right, and that's the
basically
other thing.
Impossible.
You don't know what you have because you've got all of these pieces and parts.
I think you coined a phrase around that.
Hodgepodge-itis.
You did. And it works, and people call us regularly and say, I got to fix my hodgepodge. I bring it on in.
That one's mine. It should be. There is a dictionary you can submit that to. I should do that.
You should.
I could have a word. I've never had my own word.
You'd be something.
I want my own word. So somebody submit that for me. Don
Please.
McDonald came up with Hodgepodge-itis, which is, you can define it. It's having a portfolio, an investment portfolio that has no plan, no theme,
and having many
and lots of different stuff.
Yeah, right. That's fair.
All right. Well, here's the honest report from the phone lines. They're all pretty darn empty. 855-935-TALK is the number, or Tom is going to the paper pile again.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Welcome back to the show. I'm Don McDonald along with Tom Cock. You're listening to Talking Real Money, where we really like talking real money with you, but apparently you don't like it as much as we do. 855-935-TALK is our phone number, and you can call that if you want. If you want. You don't have to. Not trying to make you feel guilty or anything.
No.
But if this keeps up, we are well on our way to the lowest call count in years.
Yeah, Seattle may be hungover from the Mariner thing last night. I mean,
you think
it took
so?
forever.
You think there's a little? Well, because they had to stay up late last night.
Yeah, they had like 9 o'clock or something.
Oh,
yeah,
God, it's like the middle of the night for you guys.
For Seattle, yeah, that is. It's an early town.
West Coasters.
So, yeah, we get a lot of written questions, too, at talkingrealmoney.com.
You had that other one.
Well, I haven't finished the one I'm on.
I was going to say, don't get it to a new one. Let's go to the old one.
Well, this isn't old. This is relatively new, but we're talking about a question from Kevin. He was talking about
Texas?
In Texas.
Yeah.
Oh, no, California, San Carlos, California. And he was saying, look, make it simple. Get rid of, in his words, the rhetoric. I'm going to call it the jargon, which I think is fair, right? He said there's a lot of people that listen to your show. They're novices. Again, and we're not picking on anybody about your knowledge or not. So, and Don makes a good point. Well, how do we do that? How do we still make the show We'll do the best we can. But he asks about another point here. He says, the current topic, my wife and I are discussing whether to use dividends to supplement our retirement or just sell some stock when necessary. I've heard you guys speak on this topic on prior shows and would love you to revisit the topic. What are the pros and cons? I prefer the practice of reinvesting dividends so that I'm always investing. This means I may have to sell stock occasionally, but does selling stock lower your future ability to make larger gains? That's something we just talked about, right? Sort of the total return method versus taking dividends and interest and that kind of thing.
Yeah, I mean, reinvesting is a good strategy.
It is.
But there's no real tax benefit to it. Because
he didn't say anything about tax. Well, you did mention taxes.
Yeah.
I mean, he's trying to decide sort of the survivability of the portfolio. We've mentioned the fact that a total return strategy, that is, things build up and then you figure out what you need to sell to pay yourself, is better, as more the portfolio has longer term survivability rather than paying yourself out high dividends or interest or that kind of thing. That's just what the numbers show. So again, and there's no free lunch with the dividends. We quoted Thaler, who points out correctly that you're getting some of your principal back if you're in high dividend paying stocks. That's the part people forget.
Well, and let's go back to why you're getting, because I neglected to mention that when we talked about that last podcast, is why are you getting your money back? I think it's counterintuitive to a lot of people because they think a dividend is like interest on a bond, that the bond's value remains static and the interest is just paid out. That's the cost of the bond. Dividends don't work that way. A lot of companies pay very large dividends out of money they don't have.
Yeah, and
which
that's the other thing people forget.
Then impute into the value of the stock. They lower the value of the stock. The other thing that dividends often do is reduce the growth potential of a stock. If you pay a big dividend, that means that you've got less money to invest back into your own company, into R&D and developing new products and becoming more productive or whatever it might be. So there's some downsides to dividends.
Yeah, and the other part to dividends is the part that the other big downside I see is people look and pick the ones that they're paying the most. Now, they don't realize that they're limiting their diversification. They're picking stocks that could be paying a high dividend or appear to be paying a high one because the price of the stock has gone down. So the dividend payout appears to be higher. And again, oftentimes they can't afford to continue paying that. So there's a whole bunch of reasons that we don't think that's a good long-term strategy. Long-term strategy. That's the case. Yeah.
And it shouldn't be something you pursue anyway. Even as a short-term strategy, you should not be pursuing high dividends. It should not be part of the planning process. We think portfolio planning involves factors that are academically sound. Right?
Yeah, I think that's exactly right. Mm-hmm. Yep.
855-935-TALK. That's our phone number. And we have a call.
Oh.
So we're going to start it now. We're going to take a break, but we're going to start it now because I want to make sure that he doesn't leave.
You're really being cautious today. Okay.
And he's in Seattle, so you never know. David, welcome to Talking Real Money.
How are you?
Good. We're better now that we are joined by you.
Yeah. Well, I heard that you said that no one from Seattle was calling, so here we go. I listen to you guys a lot. I like your show. I'm 67. I work for the city, and I've got a city retirement, and then I've got a deferred account that I put a little bit of money in every payday, and basically my Social Security, which is going to be coming up next year, I'm holding back on that because it goes up next year, right? So, long story short, I want to retire. I had some health issues a year ago. I'm kind of worked my way through that. I'm back at work. Everything seems to be okay at this point, but I'm 67, so I've outlived a lot of people, and I'm more or less thinking that retirement's around the corner sometime soon. And I kind of want to know, like, more or less what I should be expecting, or not really what I should be expecting, I guess, but what would be the best way to sort of get all my money together and be able to, I guess, last the rest of the life that I do, have, no matter how long that might be. I don't know.
Yeah, it's a great question.
I listen to you guys a lot, and there's a lot of different ways to do it, I know. So, anyway.
Well, the first thing you mentioned about Social Security being bigger next year, and we'll take this up after the break, but it goes up month by month, by the way. Every month it increases to some extent. So it's not annually. It increases each month that you wait to take it.
Oh, yeah. Waiting to take it. Yeah. Hang on a minute. We're gonna address your question. What should I do to get ready after this?
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
By the way, before we get back to the call,
yes.
I got a nice comment. Can I read this real quick before we go back to David?
If you must.
It's relevant. He said, somebody wrote and said, and I'm not going to say who, or maybe your listeners are like me. I listened to you too for years and never called, but because of what I learned about your company and Don's work ethic, I hired you. That's just very kind.
Nice, yes.
That is very nice. Oh.
Well, anyway, we've got a caller, David in Seattle.
I know.
David called to ask
discounting that
about his preparation for retirement. How should he best prepare for the retirement he's going to be easing into over the next few years?
Are you asking me?
I'm asking you.
Oh, God, there's a lot
You're
of
the other host.
I see.
There was no one. I wasn't asking David because it was his
thought
question.
You were asking him.
No,
okay. Because maybe that would be the way to elicit more comments. So you ask us a question, we ask you a question.
No.
Okay. But going back, because you mentioned you had a city retirement, Social Security, you save some money in deferred comp. There's a lot of moving parts, several moving parts. This is where
I forgot to add a couple of things, honestly.
Okay.
I also have a house.
Yeah.
I owe about $290 on it.
Yeah.
And it's in Everett. Blah blah blah. It's probably gonna. I'm hoping I can sell it for $550 or $600 at some point. So that'll be going. And I don't really have very much debt. I'm pretty frugal. I don't have a lot of bad habits. So.
A lot. That means you still have some, though, right?
Well, yes.
Well, there's always some bad habits. Like you sleep too much. You don't do things you should do.
Yeah, okay.
That kind of stuff. But I don't smoke or drink or do anything else. Any what do they call that? Entertainment.
No fun.
Stuff.
No fun of any kind. Yeah.
I kind of grindstone it a lot. Like you guys, right? But So I'm trying to, like I said, I don't have a lot of debt either. So I'm trying to get it. I'm trying to get down to zero debt other than my house when I retire, so I can kind of live off of what I have.
The fixed income.
I just don't.
Yeah.
I have a bad case of Hodgepodge-itis. Is what it really is.
Okay, but here's the thing. So the answer, and I hate saying this, but the answer is you probably need to sit down and talk to somebody about this, right?
Yeah, I know that. Yeah.
I think Don was looking to me for some other miracle answer. I don't know that I
just
have
thought
one.
you had that. No,
that's all I got.
That's the only answer you have, but I thought you just repeated again.
I see. Because you said you got to. Yeah, so the thing is, you're at that place. And by the way, and before I claim Social Security, I would always get a professional look at that, because that's such a big decision, even at 67. And you and I share the birth year that way too. But because they might say, go ahead and take it now, later, whatever. At least get a second opinion on that. But I would sit down with a full-time, 100% fiduciary advisor and walk through all of those things. And then they might say, clean this up, don't do this, etc., and be on the right track. But it sounds to me like you've already made a lot of good decisions.
Yeah, well, the first one was to call you guys. Like I said, I listen to your show a lot, and you guys touch a lot of subjects, and there's a lot of people with a lot more money than I have, but that have more complications. But you guys give a lot of good advice, and I figured that's what I was going to kind of do at some point. Sit down with Appella and just go, hey, what do you think? And try to figure it out, because like I said, you guys are smarter than I am when it comes to this stuff, for sure.
And we really truly believe, and that this is again going back to the thing that people go, yeah, sure. This is why when we started Vestory, which became part of Appella, we really truly said everybody must have access to some person somewhere that they trust will tell them the truth and isn't trying to sell them something. And so, much to the chagrin of many of our advisors, I mean, there
some
are
like it,
there
some
are some
don't.
who hate it. They just go, I'm not giving this away for free. But we have enough who do, that we can honestly say, if you called us or went online, we'll sit down with you and look at your stuff and go, this is a mess. You need to fix this. And here's how you might fix it. We're not going to give you a full financial plan, but you could buy one from us.
Even if you decide you need that. So,
You guys will probably tell me to sell my XRP crypto. That is going in the tank right now, but I'm going to hold on to it.
Okay.
No.
Okay.
Are you do you go to Vegas and just let it ride? You borrow money from the
I do. I think I just call it entertainment.
I don't even know which one is XRP.
I don't even know which one XRP is either.
Only 5,000 Bitcoin.
It makes it move. It's for moving money across boundaries, and it's just a transfer thing. And it came in like 10 years ago.
Oh, it's Ripple. It's Ripple.
I used to drink that in high school too, so it's good stuff. Sure. Yeah.
You're funny.
Yeah, I got like $3,000 in it, so I just looked at it like,
okay.
Well, it's like just gambling, it is.
But
Don's
David,
got that much riding on the Bronx tomorrow.
If you go down to Muckleshoot and you flash $3,000, they're going to give you free drinks.
Yeah.
Yeah, well, hey, that's a good point. That's a good point, man.
He loves saying that.
All right, guys, I appreciate
David.
Thank you, David.
Appreciate you guys. Thanks.
As you said, we can keep saying it because we have new listeners all the time.
Yeah.
Just like you can keep
I'll
making
say
bad dad jokes.
Yeah, sorry. Most people that come in, by the way, you make a good point. You walk out the door with something you didn't have when you came in.
And you're not going to
one way or the other.
High-pressure sales pitch.
Yeah.
We got a call, but he didn't want to go on the air.
Oh, what's the question?
Well, it's because he's going to jail. And he didn't want to go.
What?
He didn't want his voice on the air.
What do you do with, oh, God.
He's going to jail for 8 years.
Oh, God.
And he wanted to know where
This is not our CFO, right? Just checking.
Where to put his money to grow while he or she, could be a she, I guess. They didn't say, is behind bars.
That's heavy, man. But from the inside, can't you control your investments anyway? Because you can get online and stuff.
I think you probably
can. Still make decisions.
I mean, you're going to...
It's not like it's not going to...
Really, the question still is the same it is for everyone, and that is, what's the purpose of this money? What do you need to do?
We'll talk about that on the other side. That's good.
Yeah. So really, we'll answer. We'll actually give you an answer, not Tom's flippant thing.
I was trying to be kind.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree.
Yes?
Start your financial calming regimen today with a free
We're not going to a movie.
with
We're
an
going to
Appella
my
advisor
surprise.
at
I bought us annual
talkingrealmoney.com or call 800-386-3004. That's
And I'm taking her to Hollywood Studios
talkingrealmoney.com
and
because
the
a plan
Hollywood Brown
is the
Derby, our
antidote to
favorite
panic.
restaurant.
Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
For your real life and real future, Tom and Don are talking real money.
You know, it doesn't matter if you're going to jail or just getting married. What you're doing in the future really doesn't affect how you invest.
No, it doesn't. And the fact that you're going away for 8 years, and we're sorry to hear that, certainly. But the point of the matter is that should be invested for the future, your future, which I hope will be better than it is in the immediate future. The question at hand is this money when you come out that you're going to need to do something with immediately? Or is this money that's going to be still to be used later down the road? Because the decision really is to make how much risk to take with that, right? And that determines how much you have in the riskier things like stocks and the less risky things like bonds. So if you told me, look, this money's good for 20 years, you could put it all in one stock fund and have it grow for 20 years.
It also depends on how much money there is, too. If it's
That's
a very
true.
large portfolio, if the bank you robbed had lots and lots of money, I'm joking. I'm sorry. That was bad.
Okay, that was far worse than what I just said. So I'm off the hook.
You are
Yeah, well, he's all the way in Florida, so I'm only here
I'm
in
so
Seattle.
far away.
Yeah.
Find me.
Okay. Yeah.
But if it's a lot of money, then you could build a more diversified portfolio. But if it's
that's true.
You know, if it's a smaller amount, 6 figures or less, then you could certainly do. If it's for money that's you're in your 20s or 30s, and this is money for your 60s and 70s, then it could be all equities if you've got the stomach for it.
And you could use a one-fund solution, an AVGE, which is the Avantis Global Equity Fund, or Dimensional Funds World Fund, DFAW. Again, that's one exchange-traded fund that is built with a diversified portfolio. As you point out, a lot of volatility, but a lot of potential growth in the future as well. And yeah, we wish you well. And Don's joke about bank. robbery
8 years
aside.
is about bank robbery.
I have no idea.
That's about the right
Yeah.
term for bank robbery. So.
Yeah. I feel bad.
And maybe it was a white collar crime. He's got even more money.
Why are you speculating about this?
And just because the audience is, they're going, "What did he do? Why didn't you ask what he did?" Well, we couldn't ask what he did because he didn't go on.
And we wouldn't have asked.
You would
frankly.
too.
No, I
you would
wouldn't have
want to
asked.
know. Inquiring minds want to know.
I feel the pain. So.
Do-
Of separation between
you
him
do,
and
yes.
I
All
just
right.
went through this a little bit in my own personal relationship. I hated it. You know that. It was
know
just
you hated
miserable
it.
time.
You were a
Miserable
very
time.
unhappy
So
camper.
I'm much better person.
We
now.
somehow managed to survive to the end of our 2-hour radio program or our
I feel
2
bad.
podcasts for this. But these podcasts are going to be off days. These are Wednesdays and
What?
Thursdays podcasts because of the holiday.
because of
Monday's
the
Monday's
Indigenous Peoples Day or Columbus Day or whatever you call it
Whoever's
these days.
day it is. It's somebody's
Yeah,
day.
they got a day. Yeah, they got a day.
They get a day. Somebody gets a day on Monday. So you guys, this show is pushed back.
You know, the stock markets are open. The bond markets aren't. So apparently the people that trade bonds.
Wait a minute.
Got something in
the
their
stock markets are open?
Yeah. But the bond, so
But
we're
I
open
thought
for business on
I
Monday.
thought our office was closed.
No, like you would know. Have you ever been to our office? You know where it is?
I wandered in.
A couple of times.
You guys
Who's
aren't
that
open.
guy?
You guys aren't closed. It's a national holiday.
You know, we've added 8 people in the last 2 months. You wouldn't even know anybody there. They'd be walking. Who's that guy? Get him out of here.
Well, maybe I'll put it. I don't know. I
Anyway.
can still put it up on Tuesday, I guess. if people are in the office.
Anyway, so
I
yeah.
thought nobody was going to be there to run it through compliance.
Well, I don't know because you rely on the radio station for that part. I don't know what their schedule is.
Oh,
we'll be at
that's
work.
true.
The company is
I forgot
working
about
regular
that.
working hours.
All righty. Well, thanks for being there, and check us out at talkingrealmoney.com.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.